Understanding Proprietary Trading, a simple guide. Hello everyone. Today, we're diving into the world of finance to uncover the meaning behind proprietary trading. Whether you're new to English language learning or just curious about financial terms, this video is for you. We'll break down proprietary trading into simple concepts that are easy to grasp. Stay with us to learn more. Proprietary trading, often referred to as prop trading, occurs when a financial firm or bank trades stocks, bonds, currencies, commodities, their derivatives, or other financial instruments, with its own money, as opposed to using its clients' money. This means the company takes on full risk and rewards of the trade. The primary goal here is to generate direct profit rather than earning commissions from clients' trading activities. Firms engage in proprietary trading for several reasons. Profit generation. The most straightforward reason is to make money. If their traders are good, they can make significant profits. Market making. Some firms use prop trading as a way to provide liquidity in the markets, making it easier for others to buy and sell. Strategic investments. Firms might also use proprietary trading to make strategic investments in certain sectors or companies. Like any investment activity, proprietary trading comes with its set of risks and rewards. High reward potential. Proprietary trading can lead to high profits if the trades go well. High risk. On the flip side, if the trades go poorly, the firm can face significant losses since it's using its own money. Regulatory considerations. After the 2008 financial crisis, regulations like the Volcker Rule in the United States have placed restrictions on the extent to which banks can engage in proprietary trading. It's important to differentiate between proprietary trading and client trading. In client trading, a firm buys and sells financial products on behalf of its clients. The firm earns commissions from these trades. In proprietary trading, the firm is trading for its own gain, not for the benefit of clients. We hope this video has shed some light on the concept of proprietary trading and made it a bit easier to understand. Whether it's for your English language learning journey or your personal interest in finance, knowing about prop trading is definitely beneficial. Thanks for watching, and we look forward to seeing you in our next video.